all Asian markets are in the red.
Prime Minister lands in New York 20th of June for a 4-day visit of the US.
So we start to build a rebuild, if you wish, financially.
Aberdeen is selling its entire 10.2% stake by a block deal today.
And if it comes for rebidding, obviously we would be bidding in this tender again.
The first tick on the index is flat, very, very quiet.
The Nifty is pretty much struggling below the 18,700 handle.
As we know, Indigo has just signed the largest deal in the aviation history, where Indigo will buy 500 A320 planes from Airbus.
Domestic mutual funds and leading long-only fund was a buyer in today's block deal.
Midcaps doing really well, so those are the ones which are outperforming the benchmarks with gains of around 54 points.
Well, that was the day so far. You're with us here in the last hour of trade this Tuesday afternoon. We are coming to you live from the CNBC-TV18 Motira Oswal studios. I'm Prashant. With me, my colleague Surabhi here in the newsroom, in the studio. Mangalam is joining us from the newsroom floor as always. Guys, hi, good afternoon. Slow and steady, and as we start this edition of 2:30, you've got the market which has now come back into the green, and this is the greenest the Nifty has looked since the start. But slow and steady recovery from early on. I mean, that's been the theme. Not really going anywhere though on the upside. Maybe that will change as we get into the last 60 and then 30 minutes of trade. I was mentioning last Thursday's low as being important as some sort of a pivot. And guess what? Today's low and last Thursday's low are just 5 or 6 points apart. So today's low is what, 18,660? And last Thursday's low was 18,669. So, that 10.8, basically about 670 or so should be, or 660 or so should be the level which the market should defend on the way down if we've got to keep our head above water. Nifty Bank is slightly above the 40-day exponential moving average, the day's low that was breached, but not right now. Let's watch that to be held on a closing basis. That number stands at 43,456, and mid-cap and small-cap indices are doing just fine. I mean, there is enthusiasm. Yesterday, some of the air got deflated out of the rally intraday from being up 1%. Those indices closed flat, but they're back up. Mid-cap index is up 3/4, and the small-cap index is doing even better. Lots of action, lots of ideas, lots of stocks which are jumping 10, 15, 20%. And we'll talk about many of them over the next 60 minutes. Surabhi.
Hi, Prashant. Yeah, it's a remarkable comeback, right? From the lows that we were seeing in the morning, 10:30, we hit that low of, I think, 18,660 thereabouts. Yeah. And since then, it's been a very steady ride up. However, I must point out that the global setup is still not very good. If you're looking at Wall Street futures, there's a pretty sharp crackdown, at least right now, on the S&P 500 and the Dow. Let's see how this plays out. About 0.5% lower on Wall Street futures. European markets are still lower. CAC and DAX are down between 0.4% and 0.5%, depending on which picture you're looking at or which index you're looking at. But against that backdrop, yeah, these are the declines that I'm talking about. But against that backdrop, our recovery is absolutely remarkable. So on the large cap screens, I think autos have been the clear winner. Autos have come back after a couple of days of sitting out of the action after some profit taking. Today, they are the names that are right on top. So Tata Motors, Bajaj Auto, a couple of others, Eicher Motors as well, between 1% to 2.5%, depending on which auto stock you're looking at. And then there has been steady buying in technology, which is interesting. Even yesterday, we had a little bit of a glimpse of that when TCS had turned positive as well. And that continues today. So you are looking at stocks like Tech Mahindra, Wipro, Infosys, even TCS for that matter. I mean, all of your large cap technology names are providing some comfort and support to the market. So technology is looking good. And then there's life insurance. There is absolutely no stopping the life insurers, HDFC, SBI. They are up and about. On the broader side of the market, I'll just take some names before tossing it to Mangalam. There's definitely momentum that's back. Look at Ramakrishna Forgings, 6%, Central Bank of India, UCO Bank. These PSU banks are really looking quite smart. But Mangalam, I guess one would have to say that from the morning lull that we had and this nervousness that we had from that point onwards, this has been very, very smart from the bulls.
It's been extremely smart. In fact, that exactly was, the expectation this morning as well, with the SGX Nifty indicating a dip. Dips in our market have been bought, and that's better than, chasing rallies. And that's what we saw today as well. That 18,650 to 18,700 mark has been an important support zone. The supports on Nifty have been moving higher. And after testing very close to record highs yesterday, we saw some bit of profit taking. Today as well, there was a dip. It was the perfect opportunities for bulls to go ahead and put in a strong showing. And that's what they have shown. In fact, the Nifty is now up 20 odd points. And a large part of that recovery was also led by, the kind of moderation that we saw in excesses after yesterday. Yesterday, the put-call ratio was at 1.29. This morning, we went into trade with the put-call ratio being closer to 0.89. So as a result of which, there was some moderation, and that gave some more ammunition for fresh long build-up. The other thing that happened was the Midcap index, which has already been outperforming. Because the Nifty found some support, we saw more gusto in the Midcap index. So the Midcap index has now moved to the high point of trade as well, and perilously close to a record high on that index after hitting a fresh record high yesterday as well. Now, the last hour, the business end of today's trading session, we will track two things. One is the Nifty Bank, which had been underperforming, and now that too has recovered from the lows as we speak, has moved into the green. And the second thing that we'll be watching out for is the Nifty Financial Services Index. Why is that? Because it is a Tuesday, it is the Financial Services Index expiry, and in that, the Nifty Financial Services Index is between 19,350 and 19,450. So it's right in the middle of the positions that both call writers and put writers have taken. Put writers believe that 19,350 is the level that will hold on, and call writers believe that 19,450 plus levels, where the Nifty Financial Services right now may face some resistance. So if we continue to hold above these levels, maybe some shorts will cover their positions and we'll see a sharper rally in the last hour or so. But suffice to say, it's been a smart recovery. The question is, when do we go to a record high? Not if, once again.
Okay, Mangalam, we'll not talk about record highs, and then it'll come.
Yeah, I think that's the problem. The moment we put that countdown and that timer up, right?
We'll do a what do you call reverse jinx. So, all right, well, how should you position yourself in the last hour of trade? That's the question, and let's put that to our guest who's joining us. Mitesh is with us. Mitesh, hi, afternoon. 15, 16 points on the Nifty, off the lows quite a bit, as we've been pointing out. But what from here? Is there a trade on the index or stay away and stick with stocks?
Prashant, a couple of things. I think, we talked about 18,660, 650 as the breakdown zone. We kind of made a low over there, I think, which you were also highlighting at the beginning of the show, and managed to bounce back. Now, my idea is that given the fact that the indicator setup is in the weak side, in case we break 18,650, we'll see a correction. In case we don't, the market will just chop around between 18,650 and 18,850. Before I think either the indicators cool off from overbought levels, come down and give you a signal of upside move, or I think, with that choppiness, we'll come back again and retest 18,650. Maybe this time we'll try to break it. So in that sense, not very positive on the index in the short term. And you're talking about, making a reverse statement. I've been doing that the last 2 days. The market has been choppy, but no signs of a new high, fresh high. The key here, I think, is the Bank Nifty, which is still, underperforming. So till that thing comes into picture again, or Bank Nifty starts lending support to the Nifty again, I think thinking of fresh highs may not happen immediately. So hold the horses over there. On the stock side, I have a negative call on AU Bank. So that's a stock which has done very well. The long-term charts are very good, but in the short term, the stock seems like could give a pullback. So recommend a sell here. Keep a stop at about levels of 775, 775 half, and look for a target of around 745 to begin with. While on the buying side, I have Balkrishna Industries with a stop at 24.10 for targets of 25.30.
All right, Mitesh, that's about individual stocks. Just keep an eye out on HDFC Life. Every time, same time out here, we speak about HDFC Life moving to the high point of trade. It opens well, sees some more buying, and this has been happening for the last 3 trading sessions. In fact, in the last 3 trading sessions itself, HDFC Life has gained almost 10% odd, a fresh 52-week high on HDFC Life once again. Though I'll be also watching out for what LIC as a stock does from here on, because this morning there was a news that came by where the company is now increasing its communication with a whole swathe of investors, and some of them include the FIIs as well. So the life insurance space doing well, and LIC is something we'll have to watch out for, even as HDFC Life continues to surge. But that's not the only HDFC which is surging today. In fact, HDFC AMC has been the stock of all day today. In fact, it's almost a large trade, 2.2 crore shares changing hands. Nimesh joins us here. Nimesh, we'll come to you about a lot more things as well all through the course of this show right now. But for HDFC AMC, now that the trade has happened, what are the big triggers?
So, Mangalam, as you rightly pointed out, it's the stock of the day, and I guess it's a deal of the day as well. 4,100 crore block got done. That too, in the pre-open without any large discount as well. So the deal is Aberdeen Asset Management has sold out its entire 10.2% stake in HDFC AMC today in a block deal. In terms of buyers, I believe a couple of domestic mutual funds were the buyers, and one long-only fund was a buyer in today's block. So maybe the disclosures will come post-markets today, so that's something to track. But the triggers for the stock, the fact that the stock is up 10% because it's a clean-out trade from Aberdeen Asset Management. Two, because the deal happened at just 1% discount versus the expectation of a 5% discount. But the big triggers to watch for HDFC AMC going forward is one, because Aberdeen was classified as a promoter entity. Now that the promoters have sold, the free float is going to go up, which means that both FTSE and MSCI will do the rejig. Now I'm expecting FTSE to start first. So early next week, you will see a bit of a weight increase in HDFC AMC from FTSE, which can lead to an inflow of close to $17 million. That's the analyst feedback of $17 million of inflows in HDFC AMC because of FTSE weight increase going up. The other important trigger would be what MSCI does with HDFC AMC. Remember, same time last year, the stock was deleted from MSCI. Now that the free float has gone up, even MSCI will have to react. Now, a couple of analysts believe that for the MSCI August inclusion, the stock has to go up another 10% from here. If the stock rallies another 10% from here before the end of July, it gets classified for getting added to the MSCI in the August review. So that's the next big trigger as far as HDFC AMC is concerned. But I guess for today's rally of 10%, short covering as well, because it was anticipating a large block at a discount. That didn't happen. Entire clean out trade just at a 1% discount, and some big market names have bought. So that explains the move of 10% in HDFC AMC.
All right, almost 10% in HDFC AMC, but it's been a busy month for large trades. In fact, today has been a busy day for a lot of large trades. But the entire month, I mean, so many block deals happening, Nimesh.
Mangalam, only for the month of June, we are just 20 days into the month of June. Any guess as to how much has been the total amount which has been done through block deals?
I will let you do the number crunching.
So the math is 14,000 crores, which is $1.7 billion
almost $2
in
billion.
the first 2 weeks of June. And that's the kind of amount which has been traded in the block deal. So we all spoke about HDFC AMC, but today's other large block was Timken India. A 1950 crore deal got executed. The parent sold 8.2% equity, and again, at a discount. So that was one large block. If you look at the month of June, a couple of other large private equity exits as well. So Kim was one which happened today, wherein a private equity investor sold. The other notable names were likes of Kalyan Jewellers. 6.2% equity was sold by a large private equity investor against some large FIs bought, and that was one large trade. The most important trade in terms of the figure was Kotak Mahindra Bank. In Kotak Mahindra Bank, we saw a Canadian pension fund who owns close to 4%. They sold 1.3% stake. Stake worth 5,800 crores got executed in single day. So that was again a big block which happened in the month of June. Couple of other large PE exits in small companies, but they were large in terms of percentage terms. So CMS Info was one stock where private equity investors sold 14% stake, and again some large domestic and FI investors got into that as well. What stood for me, Mangalam, was Go Fashion. Not last Sunday, but the Sunday before. On a Sunday evening, the block was launched. 12% equity private equity investor wanted to sell, and the entire block was done in pre-open on Monday morning. So that shows the kind of liquidity which is there among domestic and the eagerness to buy into this block deal. So as I said, $1.8 billion in the first 20 months of June, and we still have 10 more days and have another 10 days for me to help you with chatter as well as to what more blocks can come.
You made that point there. Almost $2 billion. They say sell in May and go away. No one's selling in May. Everyone started to postpone their selling in June. And a lot of people bought on the other side as well. A lot of liquidity. 10 days still to go. A lot of deals still to come. What I'll say is that, we'll give it back to you in the studio with the promise that Nimesh will continue to bring us a lot of these deals. And right on this show itself, D Street chatter coming up. And we talk a lot more about Nimesh's D Street chatter. You call you what, the messiah of Main Street, or the big deal breaker of D Street? What should we call you?
Well, simply, we just need to track as to what's happening in the market, and I enjoy this, putting out information which helps the traders, which helps the investors as well. So that's the whole idea of putting out this news.
All right, so we will wait for that, and we will ask you to pinpoint a few stocks as well. With that, it's back to you guys in the studio. It's been a busy month for all the brokers.
Absolutely. Deal Street is buzzing, and how, We were just having this chat, Nimesh and I were debating this, that who's right? Because the people who are selling are largely insiders, either large private equity institutions, investors, or some of the promoters. Dipan Mehta is with us on the show this afternoon. Dipan, great to have you on as always. Before we start talking today's stocks and markets, your thoughts on this debate. Nimesh and I were debating, who's the smarter person here? The seller, which in many cases is the promoter or one large PE fund, which is finally cashing out, or the buyer. You can see it in different ways, right? When insiders sell, there's a red flag, but maybe it's just that they've made so much money, so they're taking some of that home.
Yeah, good afternoon, and thank you for having me on your show. I think the country is the winner over here, because if such large block deals are taking place and the promoters or the private equity is getting an exit of such a scale, then I think it only encourages them more to put more and more funds into India, because I think exit opportunity is something which all foreign investors have a look at very closely. And that's the primary question when they ask, when they're looking at investing in a stock or even a country. So the fact that we have that much depth and that kind of widespread participation from domestic and foreign investors, that such large block deals can take place, I think only shows the maturity of our market and certainly makes it far, far more attractive. The buyer also is a winner, because of the stocks that they are buying, I think we're on the cusp of a new bull market and they should see a rally in that. And the seller eventually will deploy the funds back into India directly, indirectly. So I think it's a win-win game for everybody. But I think the biggest winner is our capital markets, which show that kind of depth and width, so that it allows every participant to achieve their objective.
Nicely done, Deepan. An answer without an answer.
The winner is India. That was a nice one. That was a nice line.
Well, that's a interesting perspective. But absolutely, in terms of providing exits and the depth of the market, etc., I think the market here stands out. Deepan, hi, afternoon. Two sectors. One is asset management companies, so the move in HDFC AMC, as Nimesh pointed out, could be because of these global index providers, FTSE and MSCI, and what they may do. Or do you think underlying businesses also are going to start to look up and valuations are attractive? By the way, for mutual funds, AMCs, that TER norms have not yet been finalized. I think that will happen, I guess, over the next month or so. So that will be important. And the second sector is insurance, life insurance, which is also having a decent run. Although even after the run-up, names like HDFC Life are only about coming back to 2018, 2019 levels. Do you think there is more to go there? Life insurance, go on.
So Prashant, positive on life insurance, but not so much on the AMCs. I think that the asset management companies have got a lot of competition from discount brokers and from other fintech players as well. And there's constant tinkering with the fees that the AMCs can charge from SEBI. The SEBI wants to keep on reducing the cost for the investor, and that certainly is at the expense of the profitability of the AMC. So I'd be neutral to negative on the asset management company, the listed ones. But insurance, I think, looks very interesting. And while I was waiting, I did hear about the LIC statement which you made, and I think that's very much required, the better communication from LIC. I think that'll certainly help the stock. It is available at a very attractive valuation. There is a general positive wave towards the PSUs, and LIC certainly is a company merits attention at this point of time. I thought last quarter numbers also were pretty decent. And if they're able to follow through on better communication, declaring their EV from time to time, and explaining the business plan better, then I think certainly investors could have a fresh look at LIC, considering that it's a deep discount and a one-time adjustment, maybe 25-30% rally from these levels cannot be ruled out. But a disclosure here, we and our clients are invested.
All right, Deepan, hang in there. LIC is actually about 16% away from its all-time high. And we've seen the other larger names actually hit fresh 52 weeks high as well. So let's see where it goes from here. We'll take a short break. We'll continue our conversation with you. And on the other side, we'll also have Trideep Bhattacharya of Edelweiss Equities joining in on the other side.
Well, the green continues for the time being, though there are only small glimpses of it, but still 10 points higher on the Nifty. Well, the one stock that we're focusing on now is actually Piramal Enterprises. Now, this one has managed to hold out positive as reports are suggesting that there are two bidders vying for Piramal's distressed loan portfolio, and this portfolio could be worth as much as 2,600 crores. 5% up on that stock right now. Let's go across to Ekta to get more details. Ekta, do fill us in.
Thanks for that. Well, yes, this is a Times of India report that I'm quoting, and we have not verified this report independently, where two bidders are vying for Piramal's distressed loan portfolio, which is worth around 2,600 odd crores. The first is Kotak Mahindra Bank-backed Phoenix ARC with Cerebris Capital, and the other is ARES SSG with ACRE. Now, the deal has attracted attention as it is one of the largest transactions in the distressed asset space, or expected to be one of the largest transactions. The debt contains marquee real estate projects on sale. For example, Advantage Raheja account, which is a part of the Deepak Raheja group. It includes JWM as well as Crown Plaza in Bangalore. Two projects of JWM and Crown Plaza account for, in fact, half of the debt which is being put on sale. Other loans include Paranjpe schemes, construction, as well as a renewable energy company, to just name a few. The loans will be sourced from Piramal Capital's housing book and not from Diwan Housing. The transaction is expected to be entirely in cash versus generally what is 15% payment in cash otherwise.
All right, got that. Thanks very much, Ekta, for the details there. That's definitely working well for the stock, at least for now. Piramal Enterprises up about 5%. Deepan, I'm not sure if you're looking at this entity now. In case you do, any thoughts around this, if they do manage to get in some money in with this sale?
So I think we were very positive on Piramal Enterprises right up to the ILFS crisis. And thereafter, I think things went pretty bad for the company. And a lot of the wholesale loan book went really seriously bad, and they had to make huge provisions. And till now, the company is still trying to clean up the balance sheet. Maybe this exercise in selling of the distressed assets may be the last step which they have to take. At the same time, I think we are keenly observing the growth of the retail assets and growth of the non-home finance products which they intend to launch. So I think the company is still in a transformational phase. And while it's extremely attractive at this point of time in terms of valuation, I suspect trading even below their book value. It's just that I would like to be on a wait and watch mode and have some more information on how the business plan is shaping up, excluding the wholesale or the loans which they have given to the real estate companies. So let's just wait and watch. I wouldn't want to take a plunge right away. I think there are better NBFC options available in the market.
All right, better NBFC options available in the market. But Deepan, a couple of these stocks are doing extremely well right now. They are the ones that are related to cooling inside of cars. So Subros, for instance, is up 20%. There is a possibility of there being, ACs mandatory in all cars, including CVs going forward. Do you think this alone will be a trigger for you to go ahead and buy companies like this as their addressable market improves? And do you think this is a possibility in the first place?
Well, about the possibility part, I don't know. But I think Subros certainly is a very interesting company. It has got a very strong position in the air conditioning, the car air conditioning business per se. And it's a key supplier to Maruti and most of the other OEMs. And I think over a period of time, it will get more and more share of the commercial vehicles, whether it's mandated or not. I think, with the way the weather patterns are, air conditioning will become a must in every vehicle. So great long-term prospects for Subros as well. And I think that I'm not sure about the valuation, but I think it's not that expensive as well. And with the way the OEM sales are moving up for the industry as a whole, I'm pretty certain that Subros also should report very good numbers going ahead. So maybe at a correction when stock has cooled off a little bit, you could look at it in positive light.
All right, Deepan, we'll leave it there for today. Thank you so much for joining in. It's always a pleasure having you with us here on CNBC-TV18. I just have to make a mention of the mid-cap stocks which are rallying because we should have a look at it, right? Let's just put these names up. SJS, if you can have that up, 571. And volumes, huge volumes in the cash segment and doing so well. Let's put up Shemaru. Now, these are names which we don't usually highlight, but again, large volumes. Stocks up, Shamaru is up 9%. Imagica is up another 10%. You've got, what else? Jai Bharat Maruti, which will come up on your screen, 7.5%, huge volumes. Subex is up 7%. LG Balakrishna, I think, is up 6.5%. D-Link India is up 8% on large volumes. Rolex Rings is up 8%, 8.5%. Rate gain is back above 400 rupees after a while, I might add. Gokuldas Exports is back above 500 rupees after a while. Stocks, Gokuldas is up 8%. You look at Moripin Laboratories, 8.5%. Humongous volumes, by the way, on this one. Indian Nippon, which I think is a TVS Group company, that's up 18% on very, very large volumes. And I think that'll come up on your screen as well. Thyrocare is up 6%. Bombay Dyeing is up 7%. You got, yeah, that's the one, Indian Nippon. Saregama is up 9%. KPI Green, oh dear, I think we'll have to take a break and then come back to highlight the rest of the 25 stocks which are jumping in really on volumes as well. So this is a very, very vibrant mid-cap market. And if you just look at the market breadth, it would seem like, I mean, it's not much which separates gainers and losers because 1,250 stocks are higher and about 1,050 stocks are lower. So the gap is not that much. But the point is, stocks with volume-led gains, I think the advantage is squarely with what is going up with bulls. Tritish Bhattacharya is now joining us. He's Chief Investment Officer, Equities at Edelweiss Asset Management. Tritish, good to have you with us here. Good afternoon. Thanks very much. I mean, this is a re-rating of sorts for the broader markets, right? So it's kind of difficult to keep track of what's happening. And I mean, you can't possibly own everything. You've got to just, you own what you own and then you watch the other stuff go up. How are you dealing with what you're seeing every day?
So I think overall, so far so good to answer your question. Yes, the market has become more broad-based. And when that tends to happen, more stocks than what you own tend to go up. But as long as the stocks that you have are also going up, we are in a good space. And fortunately, so far, that has been the case. I think the market is probably becoming more broad-based. Earnings, whichever stocks and companies have more earnings triggers, more bottom-up triggers, they are the ones which are kind of, outperforming the sector, and sometimes even in a dead sector, they are doing relatively better. So for stock pickers, this is a good market to be in, I would say.
Okay, Tritish, you sound fairly pleased with the way things are set up. So that's good to hear. Afternoon, hi, Surabhi here. What's with the life insurers? What is happening with the sector? I mean, at the in February after the budget, the market had completely sounded almost like the death knell. And look at them now. I mean, it has been probably one of the most breathtaking rallies in the large cap side of the market. What's your sense now, given where stock prices are?
So I think overall, this is the case. The sector is a case where expectations got lowered meaningfully, particularly, in and around the budget, where people thought that overall, some part of the insurance market will become unattractive. And hence, from that perspective, the sector might become dead. I saw some notes coming like that. And whenever these things happen, expectations usually are on the lower side. Fortunately, we held our nose at that time and held on to our stocks in that sector, which we hold in our portfolios. And that has held us in good stead since then. But I think overall, it is not a question of the fact that the growth outlook has revived. It is a question of the fact, it's a question of the change in view, that the expectations got so lower that from there on the stocks have rallied with regards to kind of where things are. So I wouldn't go overboard at current levels with regards to insurance stocks, but happy to have the gains that we have of the stocks that we have in our portfolio.
All right, Tritish, we understand that. But, one of the themes that you've liked in the past is the defense theme, the Indianization of all the defense, expenditure that the government has to do. Prime Minister Modi is on his way to the US as we speak. Is there anything expected from there? And in defense itself, there are a couple of things. One, these stocks have run up quite a lot, with not a lot in terms of orders to show yet. And secondly, there are multiple forms. You know, there's aviation, there's shipbuilding, there's defense shipbuilding, there's defense maintenance, there's defense software. What are the pockets that you like more here, and what are the pockets that offer value?
Yeah, I think it's a great question. I would say that first of all, just to set the context right, in my opinion, this is a theme which will probably rhyme well in equity markets in India for the next 10-15 years. It's a fairly medium-term theme to talk about. At the moment, this is one of those opportunities where the opportunity size is big, in tens or 20s of billion, but we don't have the capacity or the wherewithal to supply that need. That will be the second point that I would make, that probably supply is less than half of what demand is at the moment with regards to this sector. And the third, I would say that within the listed space, if you look at it, the representation is kind of fairly limited, and limited only to mostly to PSUs, and the weightages in the indexes is about 1.5%. This, if you take about 5-10 year view, this will probably be meaningfully higher from where we are, given the policy direction and how things are headed. So I think directionally speaking, overall, the earnings, I mean, some of the companies have had their 20-year order book full in the way when they come and talk about in the earnings call. It's a matter of execution than otherwise. I'm not sure whether the US trip will lead to any particular announcement. Maybe it does, maybe it doesn't. But I think, more than just announcement overall, if you include the private markets and public markets, drones, or some of the other categories like guns, other missiles, or air, whether it's Air Force, or Army, these are the two areas that we see meaningful amount of opportunity open up for Indian players. I would also put a final point that at the moment, the opportunity set within the listed space is more PSU oriented. Over time, over the next 2-3 years, you would see more private players getting listed in this space and private players becoming bigger. That will open up even more opportunities from where we are. So, as you can probably figure out, we're probably fairly positive on this theme. We own as much as we can in our portfolios and stick along for the medium term. There would be interspersed with disappointments, but I think those would be buying opportunities is the way I see, rather than kind of trying to trade around this theme.
So, Pradeep, I'm looking at what you own across portfolios, right? This is top holdings as of the 30th of April. Stocks have done well. I mean, just so incrementally, where are you putting money? Fresh inflows.
Yeah. So I think incrementally speaking, overall, the way I read it is that the interest rates are probably close to peak, if not peak. And inflation is broadly kind of, peaking, and whether it will come down in a jiffy or not, debatable. So incrementally speaking, interest rate beneficiaries or beneficiaries of sectors which benefit from, peaking of interest rates or lower is where the interest lies. And if you sort of mix that with some of the medium-term themes that we are positive on, I think real estate is one area, both direct and indirect plays, where we are incrementally more positive than where we were before. Some of the stocks have also, over the last 3-6 months, offered some sort of valuation comfort where we have sort of increased our weightage. We continue to like the industrial or the manufacturing side of the economy. We are overweight industrials, capital goods, manufacturing. We think it's a 5-year theme, and that continues to roar on. With companies in the sector beating earnings estimates by almost about 20-30%, makes me believe that earnings are still undercooked in this area. And the area that we are underweight are consumption-oriented and export-oriented so far. That's kind of worked well for us. We will see at some point whether export plays become interesting or not. But at the moment, we are orienting ourselves towards manufacturing rather than consumption, domestic rather than exports, and incrementally more towards real estate is one segment that I would look to. In real estate and NBFCs, these would be the two spots that I would say where we have incrementally added over the last few months.
Okay, Pradeep, just a final question then. Auto comes at the cross-section of consumption and manufacturing. So is that overweight or underweight for you?
Neutral. As you said, it's at the cross-section.
Brilliant.
I think in the autos, the segment is between autos and auto ancillaries. We see probably better value at the current levels within auto ancillaries, but we will be broadly neutral within autos in our portfolios. Some of our top picks have done quite well within autos, and I think the pent-up demand has held up quite well. The disruption driven by EVs, etc., it's something that one has to keep in mind. And companies which have the right model cycle, oriented in the right way with regards to EVs, is where we focus our attention in the context of the sector. So more selective than generally broad-based, more ANCs rather than OEMs, but the stocks have done quite well.
Since everyone's talking cross-sections, should we also ask you your view on cement? Because that again is a cross-section between infra play, between manufacturing, and it is manufacturing itself looking at some weakness in costs for cement companies. What are your thoughts here? Like any of them?
Well, positive. We are overweight cement. We think that overall it rhymes in well with regards to our thematic positioning of overweight industrials, manufacturing side of the economy. We think it fits in well with regards to the real estate side as well. So multiple levers to kind of give a top line fillip over the medium term. And plus the Scott side benefit with regards to pet coke, etc., is icing on the cake really. So we've been positive on cement for a while. We've continued to add in whatever weakness that we can get. And we like some of the bottom-up stories in this as well. Some of the company-specific nuances for some of the cement stocks make it even more attractive.
Okay, all right. Trideep, good talking to you. Thank you very much for joining in and telling us your preference areas in the market. Always great getting that perspective. Well, as we take the break, the news is, look at the Nifty. We are back at 18,800. What a fantastic, phenomenal rally. Right from 10:30 onward, it has just powered through, and right now there's more momentum. The Nifty Financial Services expiry, of course, has been playing out as well. Look at some of the names from the financial side of the market. SBI Life obviously was up and about throughout. Kotak, Axis, quite a few of these names on the banking side are looking good as well. That's the index day's high on the Nifty Financial Services. Tata Motors is roaring away, 3%, and fresh highs, fresh 52-week highs on Tata Motors as well. So it's a powerful looking screen now on the upside. We do have to take a break on that note. On the other side, we come back with our special offering, D Street Chatter. So Nimesh comes back. And then, of course, some final trading calls for the day with Mitesh.
At the high point of trade, what a day it's turning out to be for our markets. Nifty 18,812, that's a near 150-point recovery from the lows. And it's led higher by, of course, both the Nifty Bank as well as the Nifty Financial Services, something we were talking about at the start of the show. The Nifty Financial Services has closed in on that 19,500 mark. 19,500 has a lot of open interest as well in terms of calls. So let's see whether it goes ahead and crosses that now or not. But it's been a stellar last 15 minutes of trade, and we've moved to the high point of trade for all the major indices. Yet another fresh record high for the Midcap index as well. But it's that time of the show where we tell you everything that's taking place in the dealing rooms, and more importantly, the stocks which you should keep on your radar as well. Nimesh, as always, joins us back on the show. Nimesh, what do you have today?
Well, Mangalam, a good recovery in the second half of today's trade, but I guess the big talking point or the dominating theme was the large blocks in today's trade. And remember, this will have a big impact on the FI data as well. The reason I'm saying is because both in case of HDFC AMC as well as in Timken, it will not get reflected on the sell side. Yes. So the numbers will only get reflected on the buy side. So the number may look very large, but that's because of the two large blocks, which are HDFC AMC and Timken India. Apart from that, I guess the momentum is back in the broader markets. You see the big surge in a lot of mid-cap and small-cap stocks in today's trade. In terms of sector-specific, I guess NBFCs and the PSU bank stocks. These are the two dominating themes where you've seen, some bit of chase happening now for the last couple of days, and that's been the case today as well. So these two sectors are well bid, is what I understand from institutions. I guess the other sector which is seeing a bit of a traction back is the large cap IT. Yeah. We've seen a big outperformance in mid cap IT. Now for the last couple of days, looks like there is a bit of money chasing the large cap IT names, the likes of HCL Tech Mahindra, all are getting well bid. So that's the overall market setup. But as I said earlier, today's number may look very large, but that's because of the two large blocks, Timken and HDFC AMC.
You spoke about large cap IT. As on Q, the IT index has moved to the high point. Again, Infosys, TCS doing extremely well as well, apart from the names that you said were well bid. But talking about names, tell us the masala here.
Well, so in terms of individual names, the first stock on my list today is Jamna Auto. A big surge in the last 1 hour of trade. There was a clean out trade from a large FII is what I understand. And after the block got done, we've seen a big surge in that stock. So maybe the disclosures and who's the buyer could be very interesting as far as Jamna Auto is concerned in today's trade. So that's the first one. Second stock is Strides Pharma. Again, within the pharma names, this was one stock which has not been much been talked about. But this month the stock is up 15-16%, a bit of surge as well of late. And now the street is expecting some sort of monetization in one of the subsidiary companies very soon. So that's something to track as far as Strides Pharma is concerned. The third stock is Dushman Pharma. Again, this is one stock been quiet for a very long time now. Today there is a big surge, up 10-odd%. Last when I checked, on good volumes as well. Even in Dushman Pharma, there was a block of 15 lakh shares in the morning, and after that a big surge. So it looks like some large investor has bought into Dushman Pharma as well. So these are a few names that I've highlighted. But as I said earlier, the big talking point was HDFC and Timken block, which happened today morning.
All right. Prashant has a question, actually. We'll go across to Prashant and then we'll talk about that.
I was waiting for one more name, but I think...
Prashant, sorry, but I guess we don't have that symbol, so we can't speak about it.
Okay, all right. Go on, Mangalam.
Okay, no, Prashant, these names are extremely important, largely because today he spoke about Jamna Auto, Strides Pharma and Dushman Pharma. He's spoken about HDFC AMC and Timken and all of that as well. Everyone here, all of us know about it. A large part of the viewers also know about it, but it's time that we reiterate this. And this because I was just looking at the strike rate of your D Street chatter over the last 2 weeks itself, a small number, but that strike rate actually beats most of the T20 batsmen strike rate as well. I mean, I was looking at some of these numbers, on June 19th, which was yesterday itself, Nimesh had reported here on D Street chatter that there is a large block deal that he's expecting in HDFC AMC. That's happened. Today we got that confirmation. Aberdeen has sold 10%. The stock has surged 10% after that as well. Just the last week itself, on June 14th, Nimesh spoke about a large offer that was expected in Timken. And today again, that was confirmed. As it were, the parent sold 8% stake in the company. That stock also in focus. Then June 16th, Nimesh told us that a leading FII investor was a seller in IIFL Finance's block deal. And be that as it may, we saw the confirmation come by that evening. FIH Mauritius had sold stake, while DSP MF bought the stake as well. On the same day, we spoke about a clutch of marquee FIIs who were buyers in Kalyan Jewelers. And later, we didn't need the data to say that, but it nevertheless confirmed that Nomura and BNP Paribas were some of the buyers in the block deal. June 8th, we go back a couple of weeks, there was a large block trade that was expected in Kotak Mahindra Bank. And the same was confirmed on the 9th of June. Nearly 6,000 crore worth large trade taking place out there. And on 9th of June itself, we reported that a promoter entity was the likely seller in CMS Info Systems block deal. And the next day, I mean, it wasn't surprising that it happened, and Baring PE sold some stake. All in all, everything that Nimesh spoke about at the start of the show, $2 billion worth large trade, I think all $2 billion worth large trades were broken here on D Street Chatter itself. So it's been amazing, Nimesh. Congratulations. I remember at the start of the year we were speaking and you said that my resolution for this year is to get fitter and get my strike rate better at D Street Chatter, which was already 99.5 and it's now become about 102.
No, I guess no, it's not like 99 or 102. But I guess the idea is to just make sure that we try to make as strong as possible, as genuine as possible. Actually, the whole idea is to make sure that the viewers really enjoy this segment, they get some cues out of it. I guess if you ask me what you read out in the last 2-3 weeks, what stood out for me, Pangla, if you personally ask me, the Timken block.
Right.
You know, not many on the streets were expecting this. Even yesterday when the book was launched, I spoke to some buy-side guys. They all were surprised that why a promoter is selling, parent is selling a 8% stake in a block deal. So I think that stood out for me in terms of the scoop, so to speak, in terms of the deal.
Well, it may have surprised you, but none of us out here were surprised. And going from here on, none of the viewers should be surprised on everything that Nimesh speaks about out here as well. You spoke about the two resolutions, fitness and getting your strike rate better. Strike rate gets better. Let's break your fitness regulation.
Fitness is something which I still need to work on.
That's all right. You know, let's break that resolution. Order a bunch of pizzas.
We'll do this tomorrow morning. We'll do this in closing bell tomorrow.
Okay, tweet on Nimesh on closing bell for everyone here. That fitness resolution breaks tomorrow.
I love this closing bell team. We got last time it was Yash. We got him to get us pizzas, and that's a great strike, Manglam. Well done. Now I'm looking forward to the pizzas that we'll get from Nimesh soon enough. Thank you, guys. Really, you know, some great takeaways on our special segment, Deal Street Chatter. For the timing, let's get back to the markets, which are moving higher and higher. I mean, the way this thing has swung, who would have perhaps thought? In fact, 18,820, 824 now. Just look at that index go. Mitesh, what a turnaround. What's the advice index and any specific stocks?
Well, I think much stronger than what I thought, and that's the good idea. I think the breadth was always positive, but this is really, you know, strength coming back into the markets. The fact that the Bank Nifty turned positive was even more surprising to me. On the stock side, I have, you know, BTST calls right now. A BTST on X side. I think that's something very interesting. That's a BTST with a stop at 217 for targets of around 225 to begin with, and that's the target for tomorrow. The other stock which I have on the list is a BTST on Gas Authority. Keep a stop at about levels of 107 and a target of 110.5 can be looked at.
Okay, you know, we'll take a quick break here. Mitesh, thanks very much for that. We'll come back. Jai Bala will be with us of Cash the Chaos with some perspective on markets from here out. Stay tuned. There's 11 minutes to go for market closing. Okay, welcome back. 70 points, 18,828 is where we are at. Eight minutes to go for close. Jay Bala is with us. Jay, good to have you with us here. Thanks very much. There is some indication of weakness, but that weakness does not last, Jay. We got an indication last Thursday. We got one yesterday, but the market just moves on. Are you turning your view decisively to look for upsides here?
No, Prashant. See, the markets are, as I spelled out last time, if the markets were to take out 1887, that's still not a given. The markets came 7 points within the all-time high and then came down 220 points. But, the trend is still up. But as long as the Nifty is managing to hold 18,464 to 18,555, expect higher highs to come through. But in the event that the supports that I've mentioned give way, it can be, cataclysmic. So, that scenario doesn't play out. Right now, the markets are still trending up. So watch out for higher highs as long as the supports that I mentioned hold up. But we are at the anniversary of the 15,183 low, and the markets are going back and forth around these levels. So it's an important juncture for the market. So it needs to be spent. When the markets take out 18,887, then we'll discuss how far the markets can go. I've already briefly spelled out last week.
Okay, Jay, hi. Good afternoon. So what's the sense? So far the Nifty has been confusing. Bank Nifty has been slightly underperforming. How would you look at that index for the time being? Is it looking weaker than the Nifty, or, is it still very much ranging action even there?
Yeah, definitely. See, the pivotals there, SBI and ICICI, they have broken supports on an intraday basis. But on the Nifty Private Bank Index, we have a lower high on a daily time frame. But even after that, we don't have a significant support breakdown. So we'll still be a little bit observant and cautious for significant support to give way. Until that, we'll assume the trend is still up. But these are warning signs that are still there. And I've spelled out several weeks back. Even the longer term picture for the banking index is something that cannot be drawn out as a expansionary trend. The upsides are pretty limited out there, even in the medium term. So, if the markets were to take out the all-time high, I believe we're either going to, do what 18,887 did to 18,604, or do a little more of another pattern. We'll discuss that later when the all-time highs are taken out. We have enough time to discuss that. This is not going to be a runaway bull market, and the sentiment is extremely lopsided on the bullish side. So the positioning is not favorable for continuation of an expansion.
All right, let's talk about individual stocks now, Jay, because we have seen a lot of these small cap, mid cap, individual stray stocks and some themes like insurance, etc., and defense surging. So amidst all of this, where would you put your money in terms of individual stocks? You have a list?
Yeah, definitely. You see, the action is definitely outside the headline indices. And we have discussed several names here, like even the insurance name. I put out, a call on ICICI Pru, which was about 460. My objective was about 540 to 550. It's come there, and there are in defense name there are smaller stocks like Mishra Dhatu, and I've been bullish on FMCG space and capital goods name, and so BEL stands out there. So Everest Canto, that's an interesting name there. And last week we had even discussed Thomas Cook. So maintain these trailing stocks in these interesting outside the main headline indices. That might be the way to play instead of putting in fresh money at the current juncture.
Any thoughts on these insurance companies, Jay?
Yeah, the momentum is pretty strong there, Prashant. ICICI Pru as well as ICICI Lombard, they still have continuing momentum. I don't think they have peaked yet. We might still see pullbacks getting bought. So I think at least we have a sequence of at least another higher high to come through. But I'm not too sure if it's going to outperform if the index were to cave in. But if the index were to take out the all-time high, I think these will be the names that will expand on their recent move from May.
HDFC AMC, have you looked at the charts?
Yeah, very interesting chart, and it's got an outstanding breakout today. So from a risk-reward perspective, it's not a best take at this point. Wait for a pullback, but if you're already wrong, you timed it pretty well. So yeah, it's probably 2,400, 2,500 on cards for HDFC AMC.
Okay. Before we let you go, any final thoughts, Jay? You want to leave us with, anything interesting you're picking up in terms of global market action, whether it's U.S. In equity indices, anything you're picking up on the dollar index, patterns worth noting?
Yeah, definitely. The dollar index has got some cross currents there. It's quite strong against the JPY, whereas it's weaker against the euro and the pound. So the pound, in fact, particularly is quite strong, and the pound and euro might keep the dollar index suppressed for a bit. A drop below 100 could be okay, but in the medium term, it's going to reverse in the direction of what the JPY is saying. When it comes to the US equity markets, last week at close, then the percentage of bullish traders on the S&P futures were standing at 93%, and on the S&P futures at about 91%. This is the level at which the November 2021 highs were clocked. The index is 8% lower, but the sentiment is at the level where the market were 8% higher. So, the markets trigger. The markets are just waiting for a trigger. The cannon has been loaded. The fuse is missing. When the fuse lights up, this is going to have a very sharp decline.
You're scaring us now, cannon, fuse, but it's a view, and we'll see what happens with the US.
Yeah, very important,
as well.
We don't preempt the trend. We just want supports to break down. Until that point, assume that the trend will continue. But once the support gives way, that only then we act on it. Until that point, it's foolish to stand in front of the trend.
No, there is actually, in the US at least, there is a fundamental trigger, actually a technical trigger as well. In the next 1 month, we'll see a very large contraction of liquidity in the US as the Treasury there rebuilds its balance sheet because, they're out of money. They need to rebuild it. So we will, now who will absorb all those bonds, etc. is a question, but we will see that over the next 1 month or so. And that, according to some, is a shock to the system. Impact on equity markets, we'll wait and watch. But thanks very much, Jai. Great speaking with you. Appreciate you joining in and speaking with us here on CNBC-TV18. 80 points, by the way, higher, so 18,837. So we are once again, as we end this day in the reckoning for all-time highs, very, very close by. Yesterday's losses completely reversed. So the market was slow and steadily recovering the losses till about 2:30. Actually till 3 o'clock. It was very, very gradual. And starting 3, if you just look at an intraday chart on the Nifty, it's a rocket. 3 to 3:30, the market just surged, and how. And I think that is true for the Nifty Bank as well, although it's more pronounced on the Nifty. Mid-cap index and small-cap indices, they added on a little bit more as compared to where they were when we started the show at 2:30. All in all, I guess a very, very good day once again for the bulls. Surabhi.
And Prashant, we're back to being just about 55 points away from the all-time high. This is the last time I'm saying it. I promise I will not say it tomorrow.
No, it's safe now. We're closed. Market's shut. Now we can.
Now I can say it. But tomorrow morning onwards, we won't remind you that we're just 55 points away from the all-time high on the Nifty. Okay, just very quickly in terms of the mid-cap action, because the market came back so strongly. Some of the key gainers include Ramakrishna Forging, some of these PSU banks like Central Bank of India, UCO Bank, they were up and about as well. Some more PSUs, Aircon, PNB, Housing Finance, doing quite okay. Titagarh Rail Systems, because remember this company told us in the morning that in case there is a rebid on the big RVNL Vande Bharat order, then Titagarh will be interested. So both of those stocks were in focus as well. Just want to end with Z, by the way. Z is ending at really, really dismal levels. 173 rupees on Z now. Serious price damage. Remember when the Sony deal was announced, it was closer to 320, the stock. And today it is at 173, 6.5% gone, as the market gets more and more uncertain about the future of that deal. But anyway, all in all, ending on a solid note, the bulls are managing a very, very handsome comeback from the lows today. On that note, we are going to wind up this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere because our Tuesday special Commodity Champions comes up next.